Okay, I'm delighted to welcome Laura Chipp, who started her career in VAT 14 years ago. For the past 10 years of her career, she's specialised in providing VAT advice to the tourism and hospitality industries, including a wide range of service department operators and property businesses, as well as tour operators, booking agents, and others within the industry. Laura has previously worked for accountancy firm Deloitte, BDO, and Elman Wall, but in 2019 set up her own business, VATNAV. VATNAV's aim is providing advice to make VAT and TOMS as comprehensive as possible for business owners and to ensure businesses get the optimum VAT treatment they can expect. So, Laura, thank you very much for being with us this afternoon.
Pleasure. Thank you very much for having me.
We're often asked questions within the ASAP about VAT, so it's fantastic that we have an expert that we can draw on now. So I wondered, just got a couple of questions, if I may. Can you give us some background about what it is you do and how our members can really understand the VAT issues that we're all facing?
Yeah, sure. No, so and what I do is as you very eloquently said, I provide VAT advice primarily to the tourism and hospitality sectors. Now, I'm sure many of your members may appreciate that VAT can be quite complex in this area, so I do tend to specialise entirely. Now, that can encompass a lot of different things, and it's really, I think, my services are whatever businesses want them to be. So sometimes we look at VAT guidance. Other times it's looking at VAT reviews and saying, well, have you overpaid VAT? If so, we really want to get this back from you. We want to make sure your position is as best as possible. Other cases, it's where there is some sort of tricky argument with HMRC, and it's just about supporting them and representing them to HMRC. But really, we do a whole range of things, compliance services as well. Always happy to talk to any businesses about their VAT issues as and when required, really. So a lot of the stuff we do is quite ad hoc, but always happy to help.
Well, that's fantastic. And tell us about the complexities of VAT and how it's applied to the service department industry. In other words, the 4% after the 28 days calculation. How does that work?
Well, that is one of a number of things with the service department industry. I think just to slightly backtrack from that, I think the first thing to understand is looking at the actual liability of the service department itself. So we've got three possibilities here. We first of all got, it can be exempt as a residential let. So normally when you've got sort of very long-term lets within the industry. Secondly, it can be subject to the standard rate of VAT as a sort of what we call a sort of accommodation held out for tourists. So a lot of the shorter term lets and possibly the sort of 6-month stays will fall into that bracket, which is normally standard rated VAT. Then you've got this other category that I think a lot of people are catching on to at the moment, which is TOMS, which is where we've got tourist accommodation, but it's bought in and sold on in a particular way. Now, the 4% rule only applies to one of these categories, that being accommodation that is standard rated in its own right. Now, the difference between standard rated and TOMS really depends on whether or not you own the property or whether you're sort of buying in and selling on in the same format. Now, the 4% rule really only applies where you own the property or sort of lease it and make changes to it. In this case, normally we're looking at taxable services. So ordinary way of accounting is standard rate at 20%. Where you've got long lets, so this is a let of more than 28 days. After the 28th day, assuming this is a sort of taxable sale in nature, HMRC basically say that the accommodation aspect of the service becomes just non-VATable. Doesn't mean it's exempt, it just means it's in a similar way to zero rating, it's just not subject to VAT. But they say you still have to charge VAT on any catering you provide, which is rare for service departments. But you also have to charge VAT on facilities alongside the accommodation. Now, HMRC say the minimum amount of that price that is relating to facilities is 20%. So you have to charge VAT at the standard rate on at least 20% of the selling price. Now that's where we get the 4% rule from, because we've got 20% of 20%. So I think people refer to it as the 4% rule, but really I think there needs to be a bit of care taken that any facilities provided don't go over that sort of default position of 20%. Now, for most service department operators, we are only looking at 20%, that sort of minimum amount of facilities. So most will be absolutely fine to apply this 4% after 28 days. But I would just be careful of making it a sort of blanket rule. So that is something that people should check.
Call it the 20% on 20%. And
yeah.
And I suppose in some ways to be applauded, but might now complicate the issue. The Chancellor reduced the rate of VAT, of course, on accommodation last week from 20% down to 5%. So what does that actually mean?
So yeah, so I think for many, so it's great news for a lot of operators in some ways, and I'll get on to that as well in terms of who may benefit and when this lovely VAT reduction may have to be passed on. Then the first thing to say is that, so we mentioned these categories earlier, exempt, taxable or TOMs. The only one of these that this reduction will apply to is the taxable category. So this is where accommodation would ordinarily be standard rated. So yeah, in that case, you've got that accommodation, so tourist accommodation in nature, that 5% will apply. So effectively you get this nice reduction in the amount payable back to 5%. Now, I think what I want to get clear, I think one of the real kind of sticking points of this is the time of supply. So the Chancellor mentioned last week that it applied between the 15th of July to the 12th of January next year. Now, I think a lot of people are under the impression that means anyone staying in an apartment between those dates benefits. And that's not necessarily the case. So with VAT, we don't look at exactly what you're doing on that day. We look at what is called the tax point for VAT. And the tax point is the date at which we account for VAT on. And it's the rate that applies on this tax point that will prevail. So if that tax point is within this 6-month period, then the accommodation will be at 5%. Otherwise, it will just remain in the normal rules. So normally the normal tax points, or we look at the earlier of the date a payment's received, the date an invoice is raised, and the date the service is completed, so the checkout date. So for example, if you receive a deposit before the 15th of July, you've created a tax point for that deposit. So the 20% tax rate will apply because it's not within that 6-month period. If the balance in payment is received on, say, the 20th of July, that particular bit will be within the 5% rule. So there's various different sort of things for people to take into account when looking at when this rate applies. There's obviously certain advantages to gain from this as well. So if, for example, it gets to the 11th of January, you might say to someone, right, pay me in advance for 2 months worth of you staying in an apartment. And that means you get that 5% rate for the entire 2-month period, January 11th to March 11th, because that tax point, the date of payment, is January the 11th in the period, in the 5% period. So it's really about sort of checking time of supply. Is really something that's important to look at. And you mentioned the long stay rule. Just to confirm, that reduction will also apply to the 4% long stay rule. So that's when I think it becomes important that we say it's 20% VAT on 20% of the product. Now we're saying it's 5% VAT on 20% of the product, which effectively means that for stays over 28 days within that period, we're looking at a 1% VAT rate rather than 4% VAT rate.
And will there be a situation whereby it transitions from the 20% of the 20% to the 5% of the 20%? So in other words, within that 28-day period, will there be an occasion whereby there's going to be both elements of VAT attributed to the stay?
So it depends on how you're invoicing. So again, so we're looking at invoice date and payment date. So if someone stays with you for a month, let's say it's between the 1st of January and the 31st of January, it really depends on when the tax point is. That stay won't be taxed at 5% and 19 days at 20%. It would depend, have they paid you before the stay? Did they pay on January the 1st? That means that's a tax point for the entire thing on January the 1st. So the full thing is taxed at 5%. Now, if instead they pay on a weekly basis, and you say, right, you're going to stay for indefinitely, but you pay per week, you may have one payment on the 1st of January, that tax point is there. So you're accounting for 5% VAT then. You've got another tax point on the 8th of January, we're still within that period, so 5% on that. And your next one is the 15th of January, a week later. Now we're outside that period, so we've got a 20% charge. So it's not split in terms of days spent, it really depends on when that tax point is. If no one pays in advance, and let's say you have that same stay, there's no payment in advance, no invoice issued, then the person checks out on the 31st of January, and let's say on that same day, we have checkout, we have payment, and we have the invoice. That is the only tax point. So that full month's worth of service is taxed at 20%.
Okay, understand.
So yes, it's unfortunately not as I think a lot of people are just thinking we're going to split things between days, but it is not. I think one rule, there is a special rule that if it is too complex this way for people, you can instead just choose to tax everything based on the checkout date. So instead then you'd think, okay, well, literally when did you check out, regardless of when you paid and invoiced, you could just say, I'm just going to base it on when I check out. Obviously then it depends, if you've got loads of checkouts on the 15th of July, let's say, then that's great because you're going to get them all at 5%. If you know that you've got a lot of winter guests and you're going to have more checkouts in, say, the 15th of January, then that might not be as beneficial, but there is that rule available at least.
Okay. So you mentioned TOMS earlier in the conversation. Tell us about that. What is TOMS, and is it an advantage here, and how does it apply?
Yeah, so TOMS is the Tour Operators Margin Scheme, which doesn't sound like it might be relevant, but it really is for a lot of service department operators. Basically, it applies where any travel service, so such as tourist accommodation, is bought in and sold on without material alteration. Now, come back to that in a minute, but what that really means in terms of the VAT treatment is instead of paying VAT on the full selling price, you pay VAT on the margin made only. Now, you can't recover any VAT on direct costs, but for a lot of service department operators, the direct cost is an exempt lease from a landlord. So you don't lose anything, but it means that VAT is only accounted for on the margin made on the travel. So for those who sell to people who can't recover VAT, so either businesses who can't or individuals, it's a massive saving a lot of the time. Now, it's become a little bit complex just because in order for it to apply, the service department operator can't materially alter. So, for example, by adding furniture, by decking out this entire apartment, that is a sort of material alteration, so TOMS wouldn't apply. So many service department operators at the moment are really trying to do their best to fall within TOMS to make sure that they are sort of saving on that. But I think if you are going to go down that route and look at it, it's really important to make sure you're fully fitting within the rules. Otherwise, obviously you don't want a few years later HMRC to come knocking. So yeah, there's a lot of hype about it at the moment. Everyone, I think a lot of advisors are saying, no, you can all use TOMS, go ahead. I would just say be a bit careful. It can be really beneficial, a really big saving in VAT, but be careful and make sure it does apply to your situation.
Okay, and you talk about HMRC there. I get contacted by members quite regularly suggesting that HMRC doesn't recognise the 20%, but I'm not going to call it the 4%, the 20% of the 20% as was currently. How do you think we can work towards getting it generally understood within the service department world and recognised then consistently?
Yeah, it's a difficult one. It's I think with HMRC, I think all I would say is that officers aren't consistent perhaps in their approach and perhaps their understanding. I think with HMRC, a lot of the time queries are looked at by visiting officers who may have you know, hundreds of different types of businesses on their books, and no sort of one specialism. I think the important thing to realise is that it's very rare to get, based on one meeting with HMRC, based on one meeting with anyone really, for someone to get a massive understanding of your business, especially if it is based in a more sort of complex topics of VAT and property and accommodation, tourist accommodation, etc. But what I would say is that I get a lot of people coming to me as well for saying, I've got this from HMRC, I don't agree with it. What even does this mean? The important thing to realise is just because HMRC say something to you, it doesn't necessarily mean it's wholly accurate. It will depend, for example, on clarifying your own circumstances. You know, sometimes it is more of a misunderstanding than anything. But just because you get something from HMRC saying you owe us this amount or you're accounting for something incorrectly, definitely get a second opinion, either from an advisor or ask HMRC themselves for another officer's opinion, just to make sure that what you're getting is absolutely, you know, thorough. In terms of HMRC recognition of the industry, I mean, it's yeah, as I say, it's a difficult one because we're looking at HMRC here as a sort of blanket overall kind of division, and actually it's made up of individual officers. But yes, I mean, I think the guidance is perhaps, you know, could be a bit clearer, I think, in some ways. But I think it's a good idea for anyone to sort of make sure their services are reviewed, so that I think when you are doing something or applying a treatment, even if it's not set out really clearly in HMRC's guidance, you've got comfort that it's you know, accurate.
And understood. So should any of our members have any specific questions, how can they contact you, Laura?
Yeah, however best they would like. Yeah, I'm always happy to have a conversation with whoever. If you'd like, if you just like a quick chat about something, then obviously give me a call. My number is 07971 642 789. But obviously I'm contactable for yeah, quick chats. Very happy to have if people just want to sound out an idea. Otherwise, email, website, etc. I'm at laura@vatnav.com.
That's brilliant, Laura. Thank you so much for your time this afternoon. We're eternally grateful. It's a complex area that we're often asked for support on, so I really appreciate everything you've been able to help us with today. So I'm sure you're very busy.
Sure we all are. So yeah, thank you very much for having me.
Many thanks.